Welcome to the Trade Securely podcast.
Every year, Atradius releases a Payment Practices Barometer survey, which shows the international behaviours for payment practices in countries around the world. This year's findings, released in early July, show the impact thus far of the COVID-19 pandemic. Though it's going to take some time to determine the full impact of the pandemic on the Canadian economy, the survey's initial findings show Canadian GDP contracting in the first half of 2020 and a rise in the value of B2B sales made on credit compared to last year. However, the majority of businesses in the country are expecting sales and profits to grow. I'm Janet Eastman, and on this episode of the Trade Securely podcast, we look at the results for Canada with my guest, Chris Short, who's country manager for Atradius Canada. Chris, great to have you back on the show. Thanks for joining us.
And thanks for having me once again, Janet.
My pleasure. So it's been quite a 2020. Your overall thoughts on the current climate for business in Canada?
Well, it's funny when you talked about the Payment Practices Barometer, which was in fact early July. I would say the world has changed yet again. So this is a good opportunity to update thoughts on the economy. In quarter two, the Canadian economy had a record contraction of about 38% on an annualized basis as compared to 2019. As you will recall, when this initially started in March, the entire world seemed to just stop on a dime, which created all kinds of pressure and all kinds of really unprecedented activity and statistics and whatever you want to say. Everything was bad. 38% contraction has never, ever happened in our lifetimes. And it was really kind of reminiscent of the Great Depression in the 30s. Since that time, May, June, July, the economy has kind of come back. And again, not at record levels, but at really strong levels. In May, close to 5%, June, 6%, July, 3%. So in that time, on an annualized basis, we're starting to recover. We're starting to come back. We've heard a lot of discussion about job losses, about economic support from the government, and that continues. And it kind of puts a sense of uncertainty as far as what's going to happen going into the fall. I think everybody is concerned that if there's a surge in cases in Canada, the economy will slow down once again. I don't know if that's going to, none of us know if that's going to happen. But we seem to be ahead of the curve on the reaction to the virus itself. But anytime you have a very quick recovery, you run the risk of burning out. And I think we're at that point coming into the fall, or that would be the concern. We also need to add well over 1 million jobs to get back to where we were pre-corona, pre-COVID. So that is really a big concern. And we've heard about comments on the shape of the recovery. And we had heard initially that people thought it would be what they were calling a V-shaped recovery, which would be a very quick descent and a very quick recovery. But I saw recently that a notable economist is starting to talk about a K-shaped recovery. And I had to think about that for a little bit because I'd never heard the term. What is a K-shape? And what it really means is that the fear is that parts, well, maybe not the fear, the reality is that the recovery will be inconsistent across industries. That some industries have already begun coming back and in some ways exceeded where they were before. It is a very telling time. Anytime you have economic disruption or anything that changes the norm, people have to change and adapt, and new industries will emerge from this, more efficient industries. I think, we're talking on a Zoom meeting, and Zoom is a good example that I think before COVID, not many people knew what it was. And now all of a sudden, everybody is on one of these types of platforms. So the K recovery would say that one part of the K is going up and one part obviously is going down. We will see economic fallout. There will be a shakeout and a kind of reordering, I think, of the economy as we come out of this. Some industries are going to do very well and some not so much.
Mm-hmm. Mm-hmm. So more B2B sales are being made on credit this year, according to this latest report. That's up to 63% from 57% last year, as well as more sales are being made domestically and not to the export market. So what can we surmise from this? Canadian businesses lacking confidence in this export market payment practices, or are foreign markets being unable and unwilling to get supplies from Canadian suppliers? What's going on here?
Yeah, I would say overall, the increase in sales made on credit is probably just a reaction to the inability to transact by cash is part of it.
Okay.
You know, we're not allowed to use cash in large segments of the economy, or we're discouraged by it. So either use a debit card or a credit card. From a personal standpoint, I think it's kind of the same when it comes to businesses. You're just not having as much face-to-face. So it would make sense that terms are changing. I don't know that will continue. It's kind of hard to tell. Maybe it will, maybe it won't. But when it comes to the changing to the domestic market versus international for purchases, I think a lot of that is just not being able to get product across the border. Restrictions are way up. I think people are concerned with products coming from offshore. And I think as part of the shutdown or the orderly closing of the border, I think it was natural that there would be more domestic sales being done.
Mm-hmm. And this is maybe a crazy question, but this isn't a deglobalization of the economy, is it? Like we've made adjustments, and whether things go back to what we considered the normal, you know, people are going to go back and those export markets are going to open up again as the borders open up.
Yeah,
That's your
absolutely.
expected. Yeah. Okay.
Absolutely. I think that in a true global economy, the purchases will come from the markets that are most successful and most efficient in providing that. So, for an example, from fruit and vegetables in Canada, you can do that. You can buy fruit from Canada in July, but you can't in December. Mm-hmm. So things like that, it will get back to somewhat of the old way of doing business, and the new normal, I guess, will certainly change some of that. I think that you know, imports from certain parts of the world may not recover as quickly because there are concerns about whatever, you name it. And I think those have all come to the fore. I do think the closing of the border with the U.S. has changed patterns of how you buy and where you buy from a little bit. And that, you know, it will settle in at a new normal that we don't really know what that will look like, but I do expect that it will get back closer to the old norm than it is today.
Mm-hmm. It's interesting you talk about fruits and vegetables and things. I was at the grocery store yesterday, and I actually was astounded. I walked in there and there were all these signs for Ontario produce. Right. And at reasonably good prices, right? Where in the past, this one store had just, you know, they'd had good produce, but it wasn't necessarily from Ontario because they were always going for the better price. And there was just tons of Ontario produce with these big signs. So yeah, that's an indication of what is happening out there right now. And it is great to see that Ontario produce.
It is.
Yeah, so it could be good for business. For the time being when that produce is available to us.
Yeah, I think that and other products that you hear from time to time backlash about where products originate from. Mm-hmm. And it is a decision that has to be made by the consumer are you willing to spend more? And if you are, great. But if not, we're going back to where we were before. And when it comes to the products being purchased in a grocery store, you can buy Ontario fruit in the summer, like I said, but what happens when we get into October, November, you're still buying from Chile or Mexico or the US or where have you, where it's fresh. So it'll be interesting as we get into next year when hopefully we come out the other side of this, whether we continue to support, you know, Ontario fruit growers, for example, and spend the extra little bit. And I would agree, they tend to be more expensive, but if more people buy it, there's more production, then maybe it comes back. I don't know.
Yeah, yeah. So there's also been a bit of a tightening of payment terms by Canadian businesses, hasn't there? So I guess this is just the impact of the uncertainty, right?
Yeah, I would say partly when you say that more sales are being done on credit, I would assume, and I don't know if I'm going to be 100% accurate on this, is that the new entrants that are being sold, or the people that are now being sold on credit, would tend to be less credit worthy than the people than the stock of companies before, right? All good companies can demand credit and get it. As you start moving down the food chain, it gets a little bit more difficult, and that would reflect people tightening credit terms without a doubt. Giving some terms, but keeping a pretty tight rein on it. Also, there is kind of a counter pressure because people are having difficulty with cash flow, so they're asking for longer terms. So it's really kind of a reshift a little bit in this. Good companies, again, can demand it and get it. The poorer companies are, so you're probably seeing this moving in two directions: tightening of credit terms for people that are not as credit worthy, while lengthening credit terms for people that are.
Mm-hmm. Mm-hmm. Okay, so there's been an 86% increase in the value of past due payments since the previous year. So that's something from the study. Can you break that down for us?
Well, that one, when I said earlier on that the statistics from July have kind of taken a little bit of a turn, I would say that if you break the COVID world reality into, it's really in kind of three buckets. The first bucket was what happened as we were getting to mid-March when everything shut down. And until that point, I think we had a concern that the economy may be slowing, but it wasn't, certainly not what it became.
Yeah.
But so when you got to March, I think it was March 16th when the world stopped, you had a very high level of amounts owing to companies. So receivables were at the normal level. I think there was certainly a slowdown in payments because, again, the world stopped. Mm-hmm. And people were worried about making payroll, making rent, keeping the lights on. So they naturally slowed down on payments. In the case of my company and others in my industry, we were allowing extended terms because people had to reset and they had to figure out how to survive in the new environment. So that was what you would have seen getting into the June, July kind of data gathering for the Payment Practices Barometer. There was a very, very high increase in non-payment. We got into the second phase where people were, well, like I said, first phase was kind of gung-ho. Second phase was figuring out how to survive. And I would say beginning in June, July, we started to see the recovery begin, where people went from selling at 100% to people selling at 30% of the normal, and then they were coming back somewhere in between. I would think at that point, if we did this Payment Practices Barometer again and just took second quarter into the end of August, I think those numbers would have gone down. So the 86% wasn't unexpected in our world. And that doesn't mean that 86% of clients were in financial difficulty. It just meant they were taking advantage of being able to not pay to survive. And once they figured out how to do that, I think things are starting to come back to normal.
Yeah. Yeah. Okay. So could there also be an impact due to the time it took people to get their work processes in order, from working from home, et cetera? You know, it's like all of a sudden you're not allowed to go to the office. You maybe don't have the stuff you need. It's like, how do I actually even operate my role in the company because I don't have my stuff?
Yes, absolutely. Okay. Absolutely. And I can talk from personal experience, and you know, Atradius is an insurance company. We don't make things. We don't make widgets. We don't make cars. We're really already pretty much paperless and in the cloud, right? So we were able to fairly quickly get back up to speed. by all working from home. And we've been working from home for almost 6 months now. But it took a while to get there. And being an international company, we had a very simple problem when this all started. And that was, how do you get 4,000 people that are spread across 50 countries in virtually every time zone, pretty much in the world? How do you get them on the system at the same time? So we, for example, started working in shifts where, North America was after Europe. So Europe had to kind of shut down before we were able to access, just because we couldn't get on the system. There wasn't enough capacity to do it. But it was pretty remarkable. Within, I would say, 2 to 3 weeks, all those problems went away. And then it became not survival, but how do we figure out how to really do this with an eye on how do we support customers? How do we support our employees who were going through mentally very difficult times? Right? It was scary. Mm-hmm. So it took us, I would say, a month overall to get back up to speed. 95 to 99% of what we were able to do. And we've continued that over the last bit of time. So absolutely, when you're not in the office, you can't cut checks. You can't have the proper people together to approve things. So it did slow things down without a doubt. And, but I think it's remarkable, as I said before, when you have a crisis time, this is a really good opportunity for people to figure out how to do things differently. And I think we've all done that. So it's kind of exciting times. Still scary, but kind of exciting. Yeah.
Yeah, and it's kind of shocking just how resilient we are. It's like, okay, when you got to do something, you just kind of figure out how to get it done and you do it. So,
yep.
Yeah.
Yep.
So overall, the majority of Canadian businesses are expecting payment practices to decline further. This is based on what the survey had indicated when it came out in early July. So there was in that survey an indication of a significant optimism for sales and profits growth. So what does this mean to us?
Well, I would say certainly efficient companies will come out of this better than weaker companies, because a lot of the weaker companies just won't reopen. They didn't have the wherewithal to survive this. So capacity will move to better companies, and that means that I think sales will come back with a different mix, I guess, than perhaps it was before. This is a very, very odd recession. When we've looked back to prior recessions, we had the 9/11 in 2001 that kind of continued a fairly deep recession and made it different. We've had LBO problems in the 90s when that led to a recession. And then, of course, we had the 2007 and 8 and 9 recession that was very much bank driven. What's really happened, I think, now is unknown. There was nothing that caused this. It wasn't a fundamental weakness in the economy that was causing this to happen. It likely would have come sometime in 2020, 21, something like that, as the normal flow of downturns and the normal ebb and flow of the economy. But this really, really put the hammer down very quickly. So I think the question is, does this replace what would have happened, or will that happen in the next several years anyway? I kind of think it's the first, but who knows? We've never been through a pandemic like this, at least in the last 100 years. So even though there's optimism for growth, I think that anytime, as I said before, anytime you have a fast recovery, you run the risk of burning out. And I think that's the concern as we get into the fall, as people start to kind of come back to work, go back to school, start to mingle with people more. Is this going to be a good or bad thing? And that's really an unknown.
Mm-hmm. Okay. Can you give a quick overview of what's actually happening with Canada's North American trading partners? Like what's happening down in the US and down in Mexico?
Well, in the US, I think that they're at a very different part of the curve, and Mexico as well, with the COVID reality. In Canada, we're talking 100 new cases a day. In the US and Mexico, it's way higher. I think that Canada has taken it, has been more conservative, or depending how you look at it, more conservative or aggressive, but has certainly reacted differently to the risk. And I think we're seeing the benefit of that in the number of cases. So the recovery in the US and Mexico may take a different shape than Canada. Again, it's a little bit of an unknown, but there's an interesting thing that is done, a study called the Back to Normal Index. And they compared the US to March when it was the base of 100. It dropped to 59% in April, meaning that business activity was 59% of normal. Kind of a perception, but it was pretty low. And now it's back to about 79%. So they're getting there. They're getting back. As the U.S. economy goes, it does impact Canada pretty significantly. So I do think that the return to normal in the U.S. is really important. When I'd said the contraction in Canada was 38% in Q2, in the U.S. it was 31%. So still really, really significant in a reduction in GDP. Hopefully, and I think that certainly the political situation and the election have kind of muddied the waters in this. Hopefully, as that gets resolved and the cases come under control, that'll be a big driver of the return to normal. Mexico is different from the US and Canada fundamentally on the economic side, but also on the level of support that the government was able to give. There were really no government incentives like in Canada and the US. There's a lot of money being spent in the northern part of the hemisphere, as opposed to Mexico, which was basically, you have to figure it out. Their reduction was 17% in Q2. It's coming off a lower per capita base, so that's really, really significant in Mexico. I would say of the three markets, that would be perhaps the most unknown. And because I think we've seen the massive government stimulus results throughout the world, we haven't really seen an economy of that size comparable to that economy where the government has not provided the initiative or the incentive. So it'll be interesting, but hopefully, again, Mexico very often follows the US and Canada to a smaller extent. But yeah, I think the Mexican economy, I think a big thing there is controlling the spread, and they are starting to reopen, and we'll see if there's a surge, and that will certainly have an impact on the economy if it happens.
Mm-hmm. And they also have significant tourism that runs their economy. If you know, yep. My impression is true too. So if people can't get down there for their summer month or their winter months, that will also impact their economy. Yeah,
absolutely.
We're lucky to be in Canada.
I think we are, yes.
Yeah. So, Chris, one final question for you. What are you really going to be watching over the coming months? Like, you've given us a pretty good idea of how things have shaped since that survey came out in July. But what are you watching in the coming months?
Oh, everything. I will say that, from when I said that we kind of are going through three kind of stages of this, and we're in hopefully the growth emergence stage. I would say it's the same thing with the amount of information. The amount of information that is coming across my desk, and I'm assuming virtually everybody else in a management position, the amount of information has exploded. Early on, the amount of information and the request for information, because everybody was trying to figure out where we were, was really mind-boggling. And then it kind of settled into, okay, we have to figure out how to use that and move forward. And I would say that we're certainly better informed now than we've ever been as a management group of Canadian, business managers. It's what we do with it, because it can get a little bit mind-boggling, and you have a lot of information that is coming at you, and you have to figure out how to sift through it. But I would say really what we're looking at from our standpoint, it's like a lot of people, a low base, like 1% growth of GDP, everybody can react to that, right? Better companies are going to react better. It's when you go from, say 4% growth to 3% growth to 1%, can be more devastating than going from 1 to 0, because you're assuming things that aren't coming true. So we're trying to forecast in our minds the overall economic impact. And if it's steady, it's good. And if it's choppy, there's opportunities, but there's also a lot of downside. So we're looking at trying to figure out, are people going to be able to pay their bills? Are people insolvencies are certainly going to climb. The concern that we have is that when people when business stopped in March, there were a lot of companies that just kind of closed their doors and are hoping to reopen, but those companies are reopening in a weaker state. So we're concerned that the weaker companies will reopen and then close again pretty quickly. So we do see, as economic activity comes back, that there will be people that will not be able to capitalize on the improving economy. So we're trying to figure that. That's really what we're looking at, is the initial level of business failures, or continuing the 86%, where I said I think that number dropped. That could go back up very quickly as we get into the recovery stage. Other than that, I think we're certainly looking daily at the number of new cases, which, fortunately in Canada have been pretty low. But that if there is a major spike, I don't know what we will do, because I don't think we can shut the economy again. I don't think there would be a lot of support for it. So we have to learn to live with it. And that's certainly a challenge. And I know for myself, locally, the big challenge is, when do kids go back to school? When do people go back to the office? When do restaurants really open? And as we get into colder weather, you can't sit outside. So how do you have people in a crowded restaurant again? I don't know. So there's a lot of unknowns that hopefully we'll find out soon. But that's just kind of a flavor of what we're looking at.
Mm-hmm. Any key takeaways for business owners?
Try to stay as informed as you can, knowing that the Canadian community has pulled together as we would expect. We're not seeing the kind of, I don't remember the last time I walked into a store and didn't see everybody wearing a mask. No one wants to, but I think everybody assumes that that's a good thing. So I would say keep an eye on that, on the mood of the country, which is always a big factor in business, right? The confidence that we're going to be able to come out of this. And I think people are more confident today than they were in April. I think April was really, really tough, right? Because we didn't know what was going to happen. I think that we've weathered the storm. I think there's still risks. There's still bumps in the road that will come. So just stay informed and keep your eye on what you want to do and stay focused.
Mm-hmm. Chris, really appreciate your insights. It's always great to get your perspective. So thank you very much for being on the Trade Securely podcast.
Okay, it's my pleasure.
Chris Short is country manager for Atradius in Canada, and he joined me from their offices or his probably home office, I'm gathering, in Toronto somewhere. So that's our show this month. You can follow the Receivables Insurance Association of Canada on Twitter and LinkedIn, and you can find links to our social channels at TradeSecurely.ca. And we're on iTunes, Google Play, and Spotify, so you can listen via your favorite podcast app. Until next time, I'm Janet Eastman. Thanks for listening to the Trade Securely podcast.